Hello, this is Hall Martin with Investor Connect. Today we're here with Kyle Samani of MultiCoin Capital. Kyle, thank you for joining us.
Paul, glad I could be on. Looking forward to it.
Well, great, thanks. I enjoyed your discussion at the Texas Bitcoin conference last week and thought it was very insightful about the investing in crypto assets. And of course, there's a lot going on in that space and wanted to share your thoughts with other people out there as well. Can you tell us a little bit about crypto assets and why that's a good investment opportunity today?
Yeah, so crypto kind of as a new technology concept is one of the, I think, most promising opportunities in the world of technology. Crypto really represents a new way to think about connecting people to conduct different kinds of commerce. The historical model for, call it, the last 100 or 200 years or so, maybe even 300 or 400 years of the world has been, you've got a group of people, they get together in a room somewhere, they either buy stuff and resell it, or they connect people together and they take a cut of a transaction. Anytime you have some sort of economic commerce that falls in the latter bucket, crypto could potentially apply and really rethink how you connect disparate parties to connect. And the amount of money that flows through those kinds of economic value flows or value networks is measured on the order of many trillions, even probably tens of trillions. And there's a huge opportunity for crypto in the world. And we're just seeing the excitement get started. The stuff is still really nascent. It's really early. It's definitely immature, to be kind. But if it works as advertised, crypto as a kind of a concept could really change the world in a major way.
And where do you think it's going as far as valuation and so forth? Bitcoin just keeps going up and up and up, and people call bubbles and all that on it. But how do you justify the valuation as it just keeps rising at this point?
Yeah, so Bitcoin and really any of us call them the general purpose currencies. Well, let me take a step back. Currencies cannot be valued. They are only priced relative to other currencies, but there's no way to do any form of valuation on them. You could therefore argue that valuing any of these cryptos is basically a fool's errand, and that's generally true-ish, although I'll caveat that, and I would actually like to talk about that more in a bit because we do publish valuation models for cryptos. The one kind of crypto we do not publish valuation models for are general purpose currencies, so things like Bitcoin or Ether. In the case of those, it's really just the price is a function of demand, and demand is a function of, do you want to miss out or do you just want exposure for the sake of diversification? If we look at crypto today, what's so crazy is that, like, the bubble, Bitcoin will be one of the biggest bubbles of the immediate future or the near future. But we're not even close to the top of the bubble yet. Wall Street is still tripping over itself trying to figure out how to get into crypto. I have monthly phone calls with people at the leading blockchain initiatives at all of the major financial institutions around the country. And I can tell you, like, unilaterally, all of them are figuring out their crypto plays. All of them are figuring out, right now, a lot of them have in-house prop funds that are buying small amounts of crypto. And all of them are figuring out how do we get our LP base, our customer base, our whatever base of capital into crypto in some sort of, not even meaningful, like 0.5% or 1% allocation. And all of these people aren't even at 0.5% or 1% yet. And if we get Wall Street, bringing 1% of capital into crypto, 7,000 is going to feel real cheap.
And so what's driving that funding going into it? What exactly are they chasing? Is it just returns? Is it liquidity? Or what is it that's really driving the move into it? Because it seems like there's just a lot going on in this space with blockchain, new applications, currency, new transaction mechanisms, and so forth. What do you think the key drivers are?
Yeah, I mean, it's just greed, right? Wall Street is the ultimate kind of FOMO bubble in the world, and everyone's seen the Bitcoin price, Ether price the last 12 months, and everyone said, I want a piece of the action. And so you're seeing that. At the most basic level, I mean, Bitcoin is just digital gold. And like, if you listen to what Warren Buffett says about gold, Warren Buffett says, buying gold is stupid because gold just sits there, and it just sits there, and it looks pretty, but it doesn't do anything. There's no cash flow yield. The kind of broader point Buffett's making is, this thing that has you can't value it, you can only price it. And the price is only a function of, will some other guy buy it from you at a higher price? Right? That's the only reason to justify buying it. So in some sense, it's kind of like, it's up in that sense, and it is like the greater's fool, kind of model of investing in that sense. On the other hand, there is real value in having some form of scarcity that cannot be inflated or manipulated by government. The value of all the gold in the world is about $7.5 trillion. So despite what Buffett thinks and even what I think about gold, like, there's like real demonstrable value that society values, the world values having some place to put your money that can't be inflated by governments. And like, if we say, given that we empirically know is true, then it's not crazy that Bitcoin could be up another 10 or even 50x from where it is now.
Well, what about non-Bitcoin crypto assets, those that are ICO-backed tokens and so forth? Are they rising just as fast as Bitcoin, or are they not rising as fast as Bitcoin? It seems like there's two separate things going on there. The core crypto assets like Bitcoin and Ether are really rocketing upwards, but is everything else doing the same? And what drives that?
Yeah, so I mean, 2017 is the year that altcoins kind of became I'd say became at least somewhat legitimate. Prior to 2017, they really weren't taken very seriously by much of anybody. If you look at this year in aggregate on a percentage basis, altcoins have rallied far, far, far more than Bitcoin. Although the last 90 days has been the opposite. The last 90 days, Bitcoin has been by far the biggest winner of the last 90 days. And so, are they all going up together? In general, if you look at 2017, there's been a pretty high beta between everything and everything else that's not Bitcoin and Bitcoin. The last 90 days, that beta has broken very strongly. So it's pretty hard to say with any conviction that like they're all going up together or they're not going up together. What I can tell you is the world is woken up and like is taking crypto very seriously, and you have a whole bunch of people like myself who are now very professionally thinking hard about Bitcoin, but in my case more about the altcoins and really figuring out, hey, where are the next 10xers, the next 50xers, and yeah, that's now I think considered a legitimate thing to do and think about, and as that legitimizes, money flows in.
So on these altcoins with these ICOs, how do you value those altcoins when the technology behind it is a white paper, an MVP, a beta version, but there's really no users, revenue, or anything else in there yet? What are the valuation mechanisms you can put on that at this stage?
Yeah, so when you think about crypto, you don't value cash flow. There is no revenue, there's no expenses, there's no yield, there's no profits, there's no EBITDA. All those metrics have to go out the window, and then you have to rethink the kind of system in a different way. Fundamentally, all cryptocurrencies are a money supply, and if you think about money supply, assuming there's no speculation, then the objective, and there's a lot of written about this, it's called equation of exchange. But the way you value a money supply is you think about what's the total value of economic commerce that runs through the system in a given period of time, and then how many times does that money turn over the course of the year, and that term is called velocity. And so let's say you have $100 billion of value flows through a system over the course of a year, and let's say that money turns over 5 times, then the value of the system should be 20 billion. And that kind of mechanism of money flows divided by velocity, that's how you value a crypto, assuming no speculation. And now you get speculators in there holding cryptos, that actually drives the price up relative to some intrinsic valuation, so relative to the kind of the medium of exchange valuation. So that's in the aggregate level what we look for. And so when we think about investing, we say, okay, well, here's this token thing. It's trading at 50 million, 100 million, 200 million, whatever the price is. And we basically ask ourselves, like, okay, well, if this thing works as advertised, could it become 2 billion or 5 billion or 10 billion? And if we think that that's possible using the MV formula and assuming no speculators, then we start to get, interested in investing.
I see. So if you're treating it as a value or a money supply, then what changes the valuation is printing more money. That's what the governments do. With the crypto assets, the ICOs seem to be promising a limited number of tokens, but can they really promise that? Can they not come back later and offer additional tokens or a different kind of token on the same digital ecosystem and thus dilute the value out?
Yeah, you cannot really dilute a token that is programmatically there. The developers could try and propose upgrades and changes, and if they were to try and do that, I suspect that most of the users of their system would flock or even fork off. I don't think we haven't seen anyone try and propose a fork of their own protocol or their own token that changes inflation. That's yet to be done. I'm sure it will be done. I expect a violently negative reaction when that happens. So I don't think I don't think any serious projects would ever do something like that. So you can't really print money. That's not really a concept here. I mean, Bitcoin has inflation, but it's predetermined, and we all know what the inflation rate is. And so you can always, if you want to value things without, being inflated, you can just divide by 21 million instead of dividing by 16.6 million, which is where we're at today.
Right. Well, you bring up a new wrinkle that investors have to consider is what happens when, for technical or other requirements, you have to fork the coin into two different paths, and then that typically has a lot of political and logistical issues that go with it. How do you? And we saw that with SegWit, other forks in Bitcoin, and so forth, and it seemed to be very rancorous. How will those things get resolved in the future? Is that going to be like a proxy war in the future, or is that going to be something that just has to be worked out by the developers? But how's that going to be determined in the future as opposed to what we've seen so far?
So there's a whole bunch of different reasons you could fork. I mean, the only kind of general comment you can make about forks is people disagree. That's like what causes a fork, what they disagree over, how they implement it. I mean, those are all idiosyncrasies that are pretty hard to comment on generally. I expect, at least for the next few years, we're going to see a lot more forking because this stuff is all just so new and experimental. And forking is, by definition, how you experiment. It's people with different ideas, and they can't, reconcile those ideas within the confines of one ledger, and so they fork off and create two different ledgers. That's going to keep happening. I'm expecting many more baby Bitcoins, so to speak, over the kind of coming years. In the long run, I expect you'll see more convergence around. I don't think you'll see a new Bitcoin a year forever, but you might see a new Bitcoin per year for the next 3 or 4 years. That seems totally reasonable to me based on just kind of current lack of maturity. There's a lot of people in the space that are playing with governance. So Tezos, which, kind of recently had a big blow up with some stuff, but like their whole kind of claim to fame was on-chain governance. Dash, which has been out for some time, already has this in practice today. Groups like 0x are spending quite a bit of their own energy and resources doing research on governance, thinking about how they want to implement governance. The intention being, how do you prevent the fork? There's real value that comes from network effects, and so if your ecosystem of capital forks, then you are losing value. Whether it's Metcalfe's law n squared or more of an n log n kind of network effect is TBD, and how much value is really being lost by fork. But certainly forks are generally bad in that they just cause confusion and cuts the community in half. And so you're seeing a lot of people playing with stuff on how do we design a system that allows for good discourse, allows hard decisions to be made, and allows for prevents forking in that it's bad for the protocol.
Good. That's a good discussion there. To shift gears a little bit, you run a fund. Can you explain more about how your fund works?
Yeah, so MultiCoin Capital is a hedge fund. As far as legally, we're a hedge fund. We trade into our positions. We are actively managed. So as far as the government is concerned, we're a hedge fund. We're a standard LPGP structure. Our legal docs look remarkably similar to a standard hedge fund docs. The only real major difference is we have a whole section there about tokens and counterparty risk and those kinds of things. But besides that kind of crypto specific section, our legal docs look basically the same. In terms of how we think very differently than a hedge fund. Most hedge funds are extremely active, very, very high frequency of trades. Although we are a hedge fund and we do exercise our liquidity, we think like a venture fund. And so I spend most of my time thinking long and hard about, okay, what's really the problem this thing is claiming to solve? What are the token mechanics? Who are the team? If it works, how big can it really get? What's the competitive landscape like? These kinds of questions. And so I spend most of my time thinking like a venture capitalist, but that's just a function of my fund strategy. And there are lots of funds out there with lots of different strategies. We think and act like VCs, although we are a hedge fund, and we do take advantage of our liquidity.
Oh, great. So if people want to learn more about what you're talking about or to contact you, what's the best way for them to get in touch with you?
Yeah, so follow me on Twitter. I'm very active on Twitter. I think I've got I provide a lot of interesting insights and commentary on the space. My Twitter handle is just Kyle Samani, KYLESAMANI. You should definitely subscribe to our blog at multicoin.capital, right there on our homepage. There's a big box that says put in your email address. We produce research about once per week, and so please do that. It's free, and then you can just email me, Kyle@multicoin.capital.
Great. Appreciate you taking time to share your thoughts today with us, and love to have you come back and go into more detail with future topics. But thank you so much for taking time today.
Thanks, all. Appreciate it. Glad to be on.